Good afternoon, ladies and gentlemen. Welcome to the REGENIX Group PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be on listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab just situated on the right-hand corner of your screen. Just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and we'll publish those responses on the Investor Meet Company platform. Before we begin, we'd submit the following poll, and if you would give that your kind attention, I'm sure that would be warmly welcomed by the company. And then I'd like to hand over to CEO Daniel Lee. Good afternoon.
Good afternoon, and thank you, Mark, and thank you everyone for participating this afternoon. Over the next 25 minutes, we're going to provide you an update on the positive first half of 2022, our positive results, and then we'll certainly be able to address some of the questions that you submit. At this point, I will turn off my camera and we'll proceed with the presentation. Standard disclaimer slide, which should be reviewed by all. I'm Daniel Lee. I'm the Chief Executive Officer for REGENIX. I was appointed the CEO in November of 2020. I originally joined the REGENIX organization as President of U.S. Operations for the Cellrite Division in January of 2019. I have over 30 years of experience in technical as well as commercial roles with medical device as well as biologic companies. Some of these were small startups and as well as some of these were established companies. Now, the reason I joined REGENIX was that what I felt REGENIX has the global opportunity to provide tissue-based products in using allograft as well as xenograft technology. The need for tissue-based technologies in regenerative medicine is quite large, and not many companies have the potential or the opportunity to use allograft as well as xenograft. Now I'll let David introduce himself.
Okay, thank you, Danny. I joined the group in January of last year. In the 20 months I've been with the company, I've been impressed with the strength of our customer relationships. Our strategic partners include some of the biggest names in medical products. These companies could work with any tissue processor out there, and they choose REGENIX because of the strength of our platforms. By way of background, I've got 30 years of experience in the medical device space. I started, ran, and then sold a contract medical device company. Along the way, I had the chance to work with Danny for several years as Chief Financial Officer at Aperion Biologics. I started my career on Wall Street, first in investment banking at Salomon Brothers, and then in corporate finance at GE Capital. And excited to share with you our first half results this afternoon.
Thank you, David. So a little bit of an overview of REGENIX. We are a global healthcare organization that's focused in the area of regenerative medicine. Those of you may not be familiar with what regenerative medicine is. It is a discipline that seeks to regrow, replace, as well as repair cells, organs, and tissues using the body's innate ability to heal itself. Now, REGENIX, our segment of regenerative medicine, is more around tissue engineering. REGENIX has developed a number of tissue-based scaffold products utilizing two of our core technology platforms, and these two core technology platforms share the same objective of providing safe as well as sterile tissue, but the processing also has the objective of preserving the inherent biologic, biochemical, or biomechanical properties of the tissue. We have manufacturing capabilities in the United States, the United Kingdom, as well as Germany. Our extensive product portfolio covers a number of different surgical specialties, and it is developed from numerous tissue platforms, which I will discuss in a couple of minutes. We have significant strategic partnerships, as David mentioned, with some of the top companies in the various markets. And we also very strong distributors in several of our markets. So the company is well positioned to be a contributor in transforming healthcare through regenerative medicine. So let me first discuss some of the highlights from the first half of 2022. We continue to focus on the 4S strategy, which we adopted in early 2021. This 4S strategy, which I'll describe in a couple of minutes, is the clear direction of travel for the entire group. And overall, the group's revenues increased 25% when we compared the first half of 2022 with the first half of 2021. I'm going to spend a couple of minutes talking about the commercial and operational highlights, and then discuss really what happened, on the financial side. Due in part to our increased capacity, which was an objective for the organization, our year-over-year unit shipments in the first half of 2022 were 34% greater than the same period in 2021. The commercial reorganization of our DCell division resulted in renewed sales growth. In San Antonio, we have settled into our expanded facility and developed additional efficiencies. So now we believe we can provide an additional 33% of sales revenue from our phase 1 expansion. Our focus on supply, which is the first of the 4 S's, one of the pillars, enabled our Byrons business to grow 32% during the first half of 2022. And then also, with a focus on supply, our GBMV joint venture, which is focused on the area of ophthalmology, demonstrated 13% growth. We also commercially restructured our DCell business and put that business back on the right trajectory with 14% growth during the first half of 2022. Our gross margins are on par with the same period last year, and this is despite all the headwinds we face, as well as many others face, with respect to price increases and supply chain challenges. Our EBITDA loss in the first half of 2022 was cut dramatically due to our revenue growth as well as careful expense management. Our cash position at the end of the first half of 2022 was 6.2 million, which is an adequate cash position to support our current growth plans. So we talk about regenerative medicine, and the segment in which Tissue Regenix participates in is the tissue engineering segment. The tissue engineering segment continues to show a large growth opportunity today as well as for the future. Tissue Regenix Group, we have the opportunity to restore the quality of life in numerous surgical specialties. And because we have one of our tissue platforms is allograft tissue, we have the responsibility to maximize the gift of human tissue donation. And we take that mission very seriously, and our goal is to continue to commercialize new as well as existing products to address unmet market needs. Our product portfolio is categorized into 3 platforms currently. Most of our bone products use a technology platform known as Byrons. The leading bone product is Concentrate, which is a demineralized bone matrix product. It's distinguished in the marketplace by not only how easy it is to handle, and this is important for the clinician when they're using it in complex surgeries, but more importantly, that it is a product that is produced from 100% bone, and every lot is verified for osteoinductivity. We need to make sure that this product has the opportunity to form bone And this is especially important in orthopedic procedures, spine, as well as trauma. The next tissue platform utilizes our DCell processing. Now, tissue that's processed using DCell, it's characterized by the ability for us during the processing to remove 99% of the DNA. The leading product in this category is DermaPure, which is a human dermis product. Surgeons also like the way this product handles, but its use is also differentiated by its readily once it's implanted, whether internally or externally, it's readily accepted by the body and it's incorporated very quickly. So its use in procedures such as tendon repair, wound repair, or urogynecology is very positive. Our birth tissue products use a proprietary processing method. AmnioWorks, which is our leading product, is an amniotic membrane, also known for its aesthetics. It is a gently processed product, which then turns it into a product that, when clinically used in ophthalmology or other indications, it's readily accepted and incorporates relatively quickly. A little bit more detail about our Byrons products and our Byrons Performance. Our Byrons platform performed quite well during the first half of 2022, as we saw 32% growth. And this was driven mainly by our demineralized bone matrix products, but also strong growth of our amniotic membrane products. With our customers, there's continued confidence in the Byrons products, and our commercial partners continue to invest in these technologies. Our increased capacities and process improvement initiatives have provided us an additional $10 million of revenue potential. This is the 33% growth that I described earlier. So with the phase 1 expanded facility, we have now realized $10 million of additional revenue potential in this phase 1 facility. Now, what does that provide us? It provides us the ability to not only meet market expectations, but also respond quicker to any changes in market demands. With respect to our DCell portfolio, we implemented a new commercialization structure to reinvigorate sales growth. In the first half of 2022, we saw a 14% increase in sales growth, versus in 2021, we saw flat performance versus the prior year. Now, this business grew due in part to bringing on distributors for this organization. We brought in a significant number of distributors in targeted regions of the United States, and this has resulted in this uptick in the sales performance. Our urogynecological partner, ARMS Medical, also demonstrated solid growth of 21% during the first half of 2022. And then lastly, OrthoPure XT, which is the only commercially available non-human biologic tendon for certain ACL reconstruction procedures. Earlier this year, we announced a partnership with Geistlich Biomaterials Italia for exclusive distribution in Italy. And so far, we are quite pleased with their early progress to date, as this product was just introduced during the first half of 2022. This slide, I'd like to talk about some of the new products that we have on the near-term horizon, which will continue to help drive adoption and growth of our technologies. The first is a soft tissue product that is intended to address urogynecological conditions that affect 1 in 3 adult women. This will be available exclusively by ARMS Medical, our urogynecological partner. The next product will be a demineralized bone matrix product for one of our strategic partners to address a fast-growing opportunity in minimally invasive treatment of certain bone conditions and bone lesions. And the third is a soft tissue product, or it's really a soft tissue process. And we're modifying the process, so this will allow us to produce products that are more in line with current market expectations, and will then also help us create new distribution opportunities. Now, the great thing about all three of these products are these were products that were requested by our partners. So as a result, we have an immediate customer for these products. Now, let me focus on the 4 S's: the supply, sales revenue, sustainability, and scale. Again, these are the 4 pillars that drive our entire organization. In the first half of 2022, supply, as we have already mentioned, the phase 1 expansion and the efficiency of objectives that we implemented provided us 33% more revenue potential with this expanded facility. We continue to add additional sourcing supply contracts for tissue, for Byrons, as well as some of our other tissue products. Our sales revenue growth came from existing strategic and distribution partners, but we also saw quite a bit of growth with our birth tissue products through one of our existing strategic partners. That additional phase 1 expansion, that additional capacity gives us the flexibility and speed to react to market demands in a much faster manner than we have had in the past. We also restructured our DCell commercial team, which reinvigorated growth and put that business now on a positive sales trajectory versus what it experienced in the past. With respect to sustainability, our EBITDA loss decreases were a result of our revenue growth, as well as our control of our expenses. Now, the capacity improvements that we have now pushed out our need for the phase 2 expansion. So that also means that our current cash certainly continues to support our current growth plans. And then lastly, scale. We plan to be moving outside the United States with our distribution and commercial opportunities. This is something that we could not do in the past because we really didn't have the capacity to do that. So we're in the process of establishing some of those capabilities with a third-party logistics partner. A little bit more detail on the processing efficiencies that we've been talking about. Certainly, when I joined the organization in 2019, capacity was a focus for our San Antonio facility. So one of the things that we implemented, of course, was that we completed our phase 1 physical plant expansion in June of 2021. And at that time, we estimated our capacity was based on really the operations that existed before the expansion. We certainly believed that the expansion would lend itself to further capacity increases, but we wanted to have experience operating in that new footprint before committing to these further capacity increases. As we moved into the new footprint, we initiated a number of efficiency as well as processing improvements, looked at ways we could optimize scheduling, cross-training, and as a result, we have realized additional operational flexibility and have noted that our throughput has increased 33% and can provide up to $40 million of sales revenue after the completion of that phase 1 expansion. So the need for operating in our phase 2 has now been pushed out to 2025. I'm now going to turn the meeting over to David Koch, who will review some of the analysis we performed regarding the processing improvements we've made. And then he will also discuss the financial details regarding our first half of 2022. David?
Hey, thank you, Danny. Danny has been in some detail describing in words kind of what the process efficiencies mean. I endeavored to show that numerically, and this chart here on the right is an illustration of the relationship between the donors processed in our facility to the number of full-time employees, and we say weighted because we weight them based on the processing time required. Some of our tissue donors, a birth tissue donor can be processed very quickly, and some of our other tissue types can stretch out over a matter of days. So we've got to wait, one donor the call on the resources is quite significantly different. But you can see the uptick over time in a variety of different means. But as we roll into the new facility in 2021, you see an uptick in the output, and then a further uptick as we roll into 2022 in the amount of donors processed relative to the full-time employees. So a nice trend there. Now, as we flip over, review the financial statements, and as per usual, Danny steals all the kind of headlines, but I'm a firm believer in repetition to make the point. So if you'll bear with me, we'll go through the financial statements. And for the 6 months ended June 30th, the sales revenue for the group was up 25%. And again, overall, our unit shipments in the U.S. increased 34% from last year. There's depending on our product mix, there's sometimes that can be greater or lesser than the sales revenue growth rate. So there is a correlation, but not necessarily an exact causation there between those two figures. But looking at that growth, the key driver was, of course, the Byrons segment, which returned 32% sales revenue growth. That's important to note that 32% is taking market share in a market that's still growing double digits at 14%. And as Danny mentioned, the AmnioWorks product was a significant contributor to the growth for Byrons. We were excited to see DCell again return to growth, showing a 14% increase in the period. And finally, our German joint venture, GBMV, increased its revenue 13% or 24% on a constant currency basis, aided by some new sources of supply that they put in place at that entity. Looking down the income statement, our gross margins remained consistent with the prior period at 46% and increased from last year's full year figure of 43%. As the price increase we implemented in the Byrons segment went into full effect in the first quarter of 2022. As the business grew, our administrative expenses decreased from 65% to 57% of revenue, so nice improvement there. This year we had no exceptional items in the first half. Last year we had our Snowmageddon event in San Antonio in South Texas. The combination of sales growth and tight expense management created operating leverage as our operating loss decreased 40% on a 25% sales revenue increase, and even more impressive or important, I think the adjusted EBITDA loss decreased 67% from prior year levels. Flipping over to the balance sheet. Key figure typically everyone wants to know, again, is our cash balance. We finished the period with a balance of 6.2 million. This cash balance supports our business growth plan, and as we've said before, we expect it to fund the company to profitability. In the other working capital accounts, our inventory turnover increased over 20%, and our collections rate in our accounts receivable improved slightly from 51 days to 50 days. In the other asset accounts, again, we do expect our R&D tax credits to decline, as the group transitions its focus from development to commercialization. On the liability side of the balance sheet, the mid-cap financing is interest only through the second half of 2023. In addition, we do have covenants associated with that financing, and those covenants are comfortably met. So in summary, we're very pleased with our first half 2022 results, as the group showed strength in all of its segments of its business and further progress on its path to sustainability. Danny?
So in summary, I think what you've heard today is that we've seen growth during the first half of 2022, and we expect that to continue during the balance of 2022. We made significant progress on our 4S strategy in terms of tissue supply, processing capacity, revenue growth across our businesses, adding more products to the product portfolio. We've seen operational efficiencies. Our phase one capacity has provided a lot more headroom for growth and flexibility for the organization. We continue to add products to our portfolios. The DCell commercial restructuring has put the business back on a growth trajectory, and there are more opportunities for growth with that division. The cash profile meets the needs under our current plans. So our board expectations for continued growth in the second half of 2022, and we are well positioned for profitability. So that concludes our presentation today. And Mark, we're need to take some questions. We'll turn our cameras on, so this way you can see our faces.
That's great. Thank you, Daniel, David, for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review the questions submitted already, I'd just like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be made available via the Investor Meet Company dashboard. Daniel, David, we did receive a number of pre-submitted questions, and thank you to those that took the time to submit those, and of course those that submitted questions through today's presentation. So perhaps if I could just share a couple of those pre-submitted questions with you. The first one reads as follows: presuming no major external event, do you expect revenue growth to be sustained in the second half of 22? I know you've touched on this, but anything you can add there?
Yes. Yeah. I mean, yeah, we certainly anticipate the positive trends that we've seen in the first half will continue. It's been a little bit of challenge, in the United States. July, it seems that everybody in the month of July wanted to take a vacation. We actually saw that in terms of hospital admissions or hospital visits, it was a 12% decrease in July of 2022 versus July of 2020. This was some data that came from Wells Fargo. So just indicative of kind of what happened, this vacation rage that we experience in the United States. But we think the rest of the year that was just a kind of a momentary blip.
That's great, thank you. Just turning along the same kind of lines, what is the maximum gross annual revenue achievable with the existing operating capacity?
We believe that currently with the phase one expansion, it's $40 million of revenue. Perhaps it could be higher as we continue to develop additional efficiencies. Sometimes it's also related, from David's chart, as you could see, it's also relative to the product mix, in which some products take longer to process, some take less, but certainly $40 million is what we believe our current facility with the phase one expansion, that's its revenue potential. And then with phase two, that would add on additional 50 million, at least an additional $50 million of revenue potential.
That's great. You kind of touched on part of the next question, but if I just break into the next question, which is kind of around the same topic around your expansion phases, but what is the likely cost and timing of the phase two expansion? And you've touched on the level of fees, level of revenue, but how would this expansion be funded?
Sure. as we described in the RNS, or we expect to need that capacity in 2025. It's estimated to take about a year to put that in place. So that would say the spend would take place in 2024. So we would anticipate funding that from the profits and cash in the business at that point.
That's
and
great.
the total cost is we've estimated publicly in the range of 3.2 to 3.8 million US dollars.
That's great. And then kind of the final two questions are around competition, around competitive risks to your product lines. And the final question was around, what competing products are there in the market and how large are companies that own these products?
The tissue business in the United States, there are a number of tissue processors, and they produce a variety of products. I think one of the things we can say about, for example, one of our leading products is Concentrate. This product, demineralized biomatrix product, it's distinguished itself in the marketplace because of its performance. We produce this product for one of our strategic partners, Arthrex, which is something we've publicly disclosed in the past. Arthrex has the opportunity to work with any company they want. They've chosen to work with Tissue REGENIX and Cellrite for this demineralized biomatrix product. So I think it is a testimony to how our product performs against others in the marketplace. So one of the things that is known about Tissue REGENIX and our products is high quality. To that question, Mark.
It's like a 7-part question.
Yeah. It's like, what else?
I think you've covered most of the competition angles, so thanks for that. If I may, Daniel, David, could I just ask you to open up the Q&A tab? You'll see investors have submitted quite a number of questions. So if I just hand back to you, and if you'd be so kind just to read those questions out and give a response, that'd be great, and I'll pick up from you at the end.
Okay.
Sure.
You want to take the first one?
Sure. Is there any scope going forward to increase the gross margins from 46%? Regards, Jeff. Increasing, our gross margins is always a focus area. One of the benefits of our process efficiencies, we've described the benefits from a capacity standpoint, but it also helps reduce our costs. Unfortunately, in the last 6 to 12 months in the world we've been living with coming out of COVID and the resurgence of inflation, we've kind of been doing our best to hold ourselves even with those cost effects, that buffers that we've been hitting. So if we get back to a more stable pricing environment, there may be scope. But right now we're doing well to maintain those margins in the worst inflation we've seen in the United States in 40 years, since I was a child.
The next question, I know you reference a pipeline of new products, when to expect these to come to market and be commercialized. As we described during the presentation, it's the near term. Frankly, we're a little hesitant to provide specific dates because we've faced some headwinds with respect to supply chain issues, things such as packaging, things that more mundane things. I mean, it's not a question of our ability to process tissue. We've done a very good job of making sure we have an adequate supply of tissue, that we have the reagents as well as materials that we need to process tissue. But some of the things that have been surprisingly pushed out in terms of timelines have been things such as packaging. Who would ever expect that a cardboard box, which we could normally get in 4 to 6 weeks, would now take 3 months? So things like that. So that's why we do expect these products to be near term, but we are just a little hesitant to actually commit to specific dates. There's a question from John S. Could I ask why phase 2 expansion of processing capacity has been pushed out to 2025? You want to just elaborate a little bit on that?
Sure. I mean, as we talk about, the 4 pillars of the group, the 4 S's, and the third being sustainability, and it's critical to manage our resources and spend capital and employ capital wisely when and where it's needed. And with the process efficiencies we've been able to put in place in our existing phase 1 expansion footprint, we just don't have the need for that capacity. So we're better served, keeping that dry gunpowder, if you will, and spending the money when we need it but not spending it in advance of the need, because there may be some other opportunities that come by that we want to be opportunistically pursue. So we'll spend the money when we need it, and we have it, and we'll take care of it, but we're not going to spend it in advance. There's a question from Peter D. Cash of $6.2 million at June 22 was below the Hardman forecast of $6.7 million. Could you comment on the factors that contributed to the outcome coming in slightly less than expected? I think in large part, we talk about this a bit in the my section of the RNS. Last year, the group in our accounts for 2021, we changed the presentation currency from from sterling to US dollars, because last year our sales line, as we translated from dollars into sterling in 2020, it misrepresented our growth rate. And so now, as the vast majority of the turnover of the group is in US dollars, and our expenses are in US dollars, that makes perfect sense. On the balance sheet, however, we hold our deposits both in US dollars and in sterling. And those deposits that are held in sterling, as they are translated into dollars as at June 30th, because the pound depreciated relative to the US dollars, there's a unrealized foreign currency translation adjustment that gets posted. And so, we kind of feel like that misrepresents the actual cash available to the group, as we don't anticipate, we do as best as possible to manage the location of our deposits with the need for the deposits. And so that's one of probably the key reasons for the delta between Hardman's research and in our own actual.
There's a question from Jeff. Will the 3 new product developments impact the second half figures for this year? We again, based upon the timing of when we do introduce these products, they could have an impact, but it's not necessarily factored into our forecasts at this point. that are part of the into the market numbers that you've seen through the analyst reports.
There's a question from Peter V. At what level of revenue do you expect the business to turn a profit, and when do you anticipate this will be? I think someone had mentioned it already. There's an analyst report from Hardman, which would be an excellent source to look at some of those market forecasts for the path to profitability for the group.
Next question from Roger is, are you being held back by labor shortages? That's a great question. It certainly is an issue in the United States as well as globally. We've been pretty fortunate. We've had certainly pressures on our labor force at the organization, but we've been again very flexible and resilient, and any impact of employee departures we've been able to absorb. So we've not been impacted by any labor shortages at this point in time.
William D has a question. Given most of our costs are in US dollars, why keep the cash in sterling? We do have still significant operations here in the UK. This is where the OrthoPure XT product is produced, as well as our corporate office and some of our financial accounting and corporate governance activities here in the UK. So that's why we keep deposits in both currencies.
Great, Daniel, David, I think you've taken every question from investors that's come through. So thank you once again to everybody for their engagement this afternoon. There's one more that's just come through.
Whoa.
Right, yeah. They don't want you to go, guys. So I'll shut up.
Okay. All of a sudden, let's see. So this the question from Jeff. The scalability part of the 4S strategy, can you expand on how this will be achieved? Let me. Well, I mean, one of the things you will see is that obviously with the revenue growth, with careful expense management, that will lead to profitability.
Yeah, I mean, scalability.
Answer this.
Yeah, I mean, scalability to me represents as the business, becomes profitable, and it starts to become a feedback loop that drives future growth, because we can take those profits and reinvest it in the business and continue to scale, whether that be new product introductions, licensing new products, buying intellectual property, mergers and acquisitions. So the scalability is the group kind of starting to fund itself and then reinvesting in itself to create shareholder value.
Yeah, I apologize, Jeff. Yeah, certainly on the 4Ss, when we look at the 4Ss, if we achieve, supply, sales revenue, and sustainability, we can invest in the scalability part. So that allows us to continue to grow and expand, move into other markets, other technologies, et cetera, et cetera. Okay. Let's see. The next question, this is going to be a tough one. DCell, not entirely free of DNA. It's, of course, we do talk about how the technology, 99% DNA removal. Any chance of prion transmission? Certainly, I'm an engineer by training. I'm not a biologist, so or an infectious disease person with respect to prion transmissions. But certainly, one of the things that we certainly are very conscious of is even on the front end, on the supply side, making sure that we work with ISO 22, ISO certified sources of our tissue. And when you have ISO, I think 22442, I think is the ISO certification or classification. It they require not only screening of the animal or at least monitoring of the animals, but also how they're fed, et cetera, et cetera. So it is something that we look at. I will have to check with some of our scientists as to maybe for a follow-up to this question, because I'm just not really fully qualified to answer that question fully.
Do you plan to IPO on NASDAQ? That's from Michael O. We've, obviously the board looks at various, opportunities. A listing on NASDAQ is probably not something in the near term. Just as a little example of what the costs of listing on NASDAQ are, the directors and officers liability insurance, which is critical for listed companies. The most bare bones policy that you can purchase in the United States is on the order of $3 million per year, which is, an order of magnitude more than the cost in the UK. So over time, as the group, grows and the market cap increases, that is something that the board, continually evaluates, but it's not a near-term pursuit for the group. And then from Tim H, will you consider a share consolidation? And yes, that is something that another item that the board actively considers, regularly, consults with its shareholders, its advisors to, what's the best strategy for value creation from a share consolidation. And as of now, the consensus has been that the liquidity that our current share price provides is a greater benefit to the group, but it is something we evaluate on a regular basis.
Next question is John. You mentioned just shifted. You mentioned your collaboration with I think we probably mean Arthrex. How much % of your turnover does this constitute? I don't think are we at liberty to discuss that?
Yeah, we do not. I mean, we do, if you review our annual report, talk about customer concentration, but it's not specific.
Yeah, sorry. John asked the question, do you have any other customers for demineralized bone? Yes, we do. We have, the only one that we describe is Arthrex, but we have a number of other customers that are in the spine space, dental space, as well as other distributors of that product, trauma. So Arthrex is not the only customer for us for demineralized bone matrix products.
That's great, Daniel. David, I'll jump in again, and hopefully we won't see a barrage of further questions. But if we do access any further questions from investors, we'll make those available to you after today's meeting. I know investor feedback is particularly important to you both, and I'll shortly redirect investors on the call to give you their thoughts and expectations. But I wondered if, before doing so, if I may, Daniel, just ask you for a few closing comments just to wrap up with.
Yeah, I'll just keep it very simple. I think we're very pleased with our first half 2022 performance. We expect this to continue during the second half of 2022. We've made a lot of progress on our 4 S's, and we certainly and our board supports that we will continue to exhibit good performance in the second half, and we look forward to meeting with all of you again with those results.
That's great. Daniel, David, thank you very much indeed for updating investors this afternoon. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be warmly welcomed by the company. On behalf of the management team of Tissue REGENIX Group PLC, we'd like to thank you for attending today's presentation. Good afternoon to you all.